Welcome to this week's episode of the Real Wealth Podcast. We've been on a bit of a hiatus for the start of the year, and the best indication of that is the fact that we normally at the start of the year, I'm joined by my two business partners Laurie and Conar, and we go through our review of last year and the big plans that we have for this coming year. It's taken us to April to get this podcast done. That's a brief indication of just how incredibly busy we've been over the last little while, but anyway, let's get into it. Welcome, Conar, Laurie.
Thanks for having us, man.
Good to be here, mate.
Always a pleasure to have you.
Yeah.
It's also a
You
short
never
walk.
ask us to come on.
I know, it's
Once
just
a year.
You keep asking me, but I'm very in demand.
You're a very, very busy, important man. You've not got time for me. Awesome. So, I think where the obvious place to kick off for us is a year in review. Our financial year ends March 2025.
Yeah.
So 2024, 2025, what's the highlights, boys?
24-25. My recollection was the Aberdeen deal finally getting concluded in September, I think it was.
After 2 years?
Fucking 2.5 years, I think it was. And a crazy bastard ride trying to get that over the line, even right till the last fucking minute. You know, it was ridiculous. All the stuff that went into making that happen. But you know, at the end of the day, you know, Aberdeen is a fantastic market in our view. That's why we made the move. You know, it's a long-term view. You know, 100 units valued 12 mil, bought for 7 mil and 65 grand a month, something like that.
I think in total last year we bought just under 50 mil of property in Scotland for ourselves and our clients across the financial year.
Yeah.
Incredible.
So that was a big marker for us, really.
Do you know the number of traded deals by any chance?
Don't know the volume, but we're averaging, well now, I mean, that kind of goal of, it wasn't really a goal, but that result, I guess, of hitting like 50 mil worth of property in the year is what spurred on this target of mine to buy and sell a property every day of the year for the next 5 years. So, you know, we're averaging, we've done that kicking off into this year, but we're averaging the 30 every month. So we are on track to doing that.
Yeah.
I think the most interesting thing about that number of 50 mil is to put it in context with the sort of deals that we trade and we buy are very much buy to let. You know, they have to be at a certain level. Anything above 150k really doesn't work that well for buy to let. You know, those are the sort of deals we're trading our clients, those are the sort of deals we're buying for ourselves. There's very few properties that are out with that marker, and when there are, they're usually auction sales that we're selling to external clients. So to hit 50 mil of these low value properties, you know, probably our average end value is about 75-80k tops, right?
Yeah.
That's a huge volume of transactions.
Maybe a little bit higher these days, I think, just because of capital appreciation that we are seeing, the values are slightly more. But with the more proactive lenders coming in the limited company buy-to-let space in Scotland, you know, you're getting day one refinances from as little as 50k val, so it just opens more flexibility. I actually seen there's another bank, Coventry Building Society or something like that, it's coming into buy-to-let space, limited company. So again, like from a lending perspective, it's becoming more attractive in terms of options. So the types of deals that can be bought and traded and make sense, your financial sense is improving, which is good. But I think we were averaging about 31% below market value across that full 50 mil. So it's like 50 mil of asset value, but we actually only paid like 35.
And again, that's another big change from last year that has driven us to have to get better discounts, is the increase in ADS, right, going up from 6 to 8%.
And I don't know if it's a psychological barrier in my head, but 8%'s a lot of fucking money. When you look at it, it was fine when it wasn't fine, it was a bit nasty when it jumped to 6, but it just was still like at 6. See, when it's 8, it might as well be fucking 10.
That'll be 10 soon enough, bro.
It's just really, really nasty when you're doing it, and to try and charge a fee on that, you know, from our business sense, like it has made things really difficult. But what we've ended up there is, you know, when we get them, they're really quality, and then we just, you know, up valuations are coming recently thick and fast in the right areas, which is good.
They are, man. I feel like that's been a big shift recently.
We just spoke about one this morning.
Aye, the last few months. Well, I had that's 2 this week that have both been upvalued. You know, but the clients are getting a lot of upvalues, and that wasn't always the case before. You know.
No, I think there has been a bit of stagnation, particularly in the Aberdeen market. You know, it's been really tough to see any upvalues.
That's a good few. We've had upvalues in Aberdeen. We've had values coming in bang on where we thought they would be, whereas we've had some challenges on our own stuff and different ones. But I think it just depends from a surveyor's perspective. You know who the buyer is as well. I think. But that was Chris. She just bought one in the West End of Aberdeen that she's running as SA, and I think she paid 85, but it was a pretty much walk-in nick. It just had to be SA ready, and it just revalued at 110. She did nothing to it.
Straightforward in and out. I think another obvious change in the market last year was the lending, and you know we've seen this get progressively better and better since since we were starting back in 2020. It was pretty tough. You know, when we started our journey back in 2018, you were talking about a situation where people were just transitioning to buying through companies, so there was very little limited company buy-to-let lending available in the market at the time. So a few guys, criteria was very restrictive. The 6-month rule was definitively enforced across the board, and in the last year in particular, rates are coming down, lenders are coming to the market, day one refinance,
incentives are good, like
incentives are solid,
cashback, free legals, free vals, like it's fucking phenomenal now.
Big move for Aldermore going to day one refinance as well.
50k odds, I think it is.
They've reduced their minimum property value as well. So things do seem to be getting a lot easier in terms of the lending, and if the exits are easier, the deal overall is easier. So
it just depends on what the goal is. You know, if people want to grow fast and they want to get in and out, then they need to have flexibility in the lending. Still a lot of that very traditional investment point of view of just gather a deposit, buying a buy-to-let mortgage, pay close to full market value, if not pay market value because you like the look of the asset. Still a lot of those buyers out there not doing it professionally, so they've never really been affected by lack of creativity in our space. But the fact that there's more lenders getting on board, I think kind of demonstrates what the whole making it harder for buy-to-let to work in the UK, but mainly in Scotland for what we've seen. Because now when they are lending, it tends to be a lot more professionals that are doing it, which I think is why the banks are backing it a bit better. Just my personal view.
I mean that does, when you talk about these kind of non-professional landlords buying at full market value, I mean that's a really scary place to be just now in this market when you factor in fees and ADS and all that sort of stuff, you're going to be in a property for 110%.
Easy.
Before you've made any money, and whilst capital appreciation has been solid, you're talking about 2, 3, maybe even 4 years before you've made enough capital appreciation just to offset the negative equity that you're in from day one.
I said the only payoff is you're getting is it's in the future and hoping it's went up in value, and who knows what can happen by then. Whether you even see the benefit of it at that point. Especially when you look at the Aberdeen market, some of the vendors we were speaking to, they've taken a hammer and seriously grim position, and they just bought it because they could only see it going one way.
And that was another thing I was going to mention, because everybody asks us what the impact is of ADS, and for sure it makes things harder. But the reality is that the people that are penalised more are the exiting generally landlords, because it's those investment properties that just don't shift for
there was very few that when it was announced from people I've spoken to that had deals in legals that, because they only gave us 24 hours notice as they always fucking do, to try and get this was concluded, unless it was an auction deal, which actually saved quite a lot of our clients because the contracts are done front end on an auction deal. But if they hadn't concluded, there was very few sellers who didn't take the hit. A lot of the buyers were just like, well, fuck it, I need to drop my price, and there's nothing that they were really going to do. They're too far down the line. And I think it was very slim from the lawyers I spoke to of deals that actually fell through over the ADS argument. So whoever they were trying to penalise, at the end of the day, they don't care who it comes from, they just want their money. But it was the sellers who took the hit, not the investors.
Yeah.
And that's what we're trying to do. We just have to explain and educate a lot of the motivated vendors we get about the costs that we have to face.
Yeah.
And if the property is only suitable to an investor and it's not a family home or something that somebody's going to pay top price for to live in,
Yeah.
then these are the true costs of what we have to pay, and it's not our fault, and we're not saying the property is then worth less. It's just that this is an actual cost that we have to facilitate and factor in. So
This is what we
can
afford.
offer.
Yeah. But we've massively ramped up the deal machine now. We're at some fucking stage with that. It's really impressive to see, and that's another reason that we've not done this podcast until now in April, because we've been massively focused on growing the business. Another big move we decided on last year is the office move. So that was all planned, and I think we executed it in maybe January, but we don't actually move in until should get the keys next week actually. It's all been planned. But that's another big move, a cool move, very nice, big, beautiful space. Compared to this fucking industrial unit we're in, right now, do you know what I mean? But that's all, that's another move that we've made as part of the kind of overall growth strategy. Bringing on more people, expanding the team, expanding the deals operation, expanding the clients as well. We've grown that base as well. So,
what benefit do you think we're going to see from the office move?
I think collaboration. I think team performance, cooperation. Just everybody working together a bit better. This place is just so disjointed, right? You've got we put a wall up here and made a room here and made a room there, and then put a room up the stair and then made another room, because that's just how we've grown. It's fucking business startup 101. You go through all this mad shit, don't know what the fuck you're doing, and get to a stage where you just make it a little bit better. I think for a lot of different reasons. I mean, the office location, city centre Glasgow, is fucking cool. Love the location. And funnily enough, before we even decided on that location, we were actually about to do a deal on another, if you remember.
That's right.
That was right up at the end,
much bigger
St
one,
Vincent Street, I think. It was all the new plug and play, I think they called it. And we were done. We weren't even going to go anywhere in the afternoon because we were fucking sold on this first one. And it was actually just the location of that second one and the kind of layout as well that made it really attractive. But then on top of that, you look at what we've done kind of refurb wise and decor wise, and these, about to order these soundproof pods, the space tanks as they call them, fucking couches, fake plants, bamboo sticks.
I gave them sign off on them.
Well, I've done a good job of getting the price down.
Saved a couple of grand
got rewarded
from our Chinese friends.
Got to a point where I couldn't say no.
But I just mean all these things are moves in the right direction for the growth of a business. And every time we made a move where we are now to add on another room, it was I fucking nailed it. Now we've got another room for this. But actually it's just not suitable. We at the stage we're at now need an office space. It needs to be a cool place. It needs to be exciting, and I think we're achieving all of that stuff. Very different vibe in the new office. So I'm excited to kind of get that done.
Do you think we're at a kind of pivotal point with our business now, where things are going to dramatically change? And if so, what do you think?
I tell you what I do, and I think it's because we're fucking laser focused now. And I think again back to business startup 101. See, when you start out in business, and another thing in the background, I've been writing this book, which is also nearly finished, which is another thing that's been going on in the background, since the kind of start of the year. But you just start up and you want to take over the fucking world. And all these folk that have been there, done it, and they're telling you to calm the fuck down, just focus on this thing. And you're like, nah, we'll start a company for this and a company for that, and a company for that, And it's just ambitious growth. You want to do all these things and grow all these things. Now we've ended up in a really cool position now, and I do think we're going to. Well, we are already scaling things up. The clients, the deals, the portfolio deals. The developments business now is fucking refined. That's a machine, man. That just churns shit out. Auction flips, refurb flips.
I think it's important to take a bit of time on this point, because was one of my talking points about biggest challenges in getting to the stage we've got to. And I think we're all aligned on sort of the biggest mistake we've made at the start.
Yeah.
And you nailed it there in terms of it's focus, not having focus. And you know, they talk about the grass is always greener on the other side until you realise it's fertilised with shit. and that is pretty much it. You know, when you're in, you know, the buy-to-let business was going very well, it was very passive, so naturally we're like, okay, well, what's next? Right, this stuff's kind of taking care of itself and we'll grow it in the background, but what else can we do within the property sector? So you know, we started the training business, which has massively morphed into Real Property Scotland, but we also looked at developments. Let's do bigger things, bigger profits, bigger developments, you know, and it was a massive mistake.
Because they sell you the dream of the monopoly, you know, literally the game. You know, you start by building a house or getting one house, and then you have multiple houses, then you build hotels, and you fucking scale. It's like, well, no, actually, you could just keep buying houses.
Correct.
Like, you don't need to go and follow that stage, and it's almost like to do buy to let means you're just an amateur, because you're not doing big, like, multi-million like new build developments.
But even if
and they're just very different things.
But if you think about our focus, our like refined model now, it's like we are still like expanding in different kind of ways. We're doing more of these flips. We're doing more of the refurb to flip. We're doing serviced accommodation now. You know, there's different things that we're doing, but we don't need to fucking take on the world and buy a fucking building in central London and convert it to 100 flats and all that shit. That used to be like an ambition of mine. Like, fuck me, I used to say I want to build a skyscraper. Fuck that. Like, I just want to like do buy to let, do serviced, do these fucking easy peasy flips, and we've got a really solid like machine operating.
I think when you realise the profitability and optimising and maximising the stuff that you know inside out, it's just like, it's so easy to make money here. Why would I want to do this other stuff? But at the time we were thinking, well, this makes sense. That, you know, the reality is, if you're in property, the idea of development makes sense. It's like, it makes sense as the next step. The idea of having a building company when we're doing all these refurbs, and there has to be profit in those refurbs, so why don't we just take that profit? All of that makes sense on paper, but if you miss the fundamentals of like, where are our skill sets? You know, what are we good at? What are the things that we can leverage easily to make money? Those two moves between the developments business were so massively wrong. You know, and they say that most successful entrepreneurs will start a business based on one of the 3 P's. It's passion, profession, or pain. So you've got a personal pain where you think you have a better solution than what's available out there, and that can be a really good driver towards business. Or you've been in a professional industry for a while, you've seen how it works, you've seen the ins and outs of it, you think you can do it better, so you start your own organisation. Or a passion, something you love that you go deep with, you understand inside out because you're passionate about it. You know, those are the things that generally drive an entrepreneur to start their own business and to succeed in the long term, but it has to be supplemented with the skill set to be able to make it work. We are not guys that are going to be on site every day pushing forward construction projects, and it's just not where our skills lie. We're office guys, we're service based guys, we're good at doing deals, we're good at structure and finance, we're good at making things happen in the background. Those businesses just didn't make sense for us, and it took us longer than it should have to realise that and to make our exit.
That's why a lot of trades guys think that they'll be good at property, because they've worked on them all their days. But actually, it's like, it's a game of finance. It's nothing to do with bricks and mortar, really. You know, that's just the product, but how the money's made is nothing to do with the physical capability of the asset.
Man, fucking paperwork exercises, dealing with finance, sending emails and shit like that. That's the type of shit we do to make money. It's fucking nuts. So it doesn't need to be more complicated than that. Do you know what I mean?
No.
It is so bizarre how, as well, people can take their own skill set and convince themselves that that's the right skill set to go into. As you say, with like, you know, a joinery company, I should go into property because I'm doing other people's property. That makes sense, but that's not the game. It's not the game. You know, and you know, we've been through a massive realisation in that, and you know, the ultimate goal with us now going forward is focus and growth in one area. You know, one area that we know very well, and we've successfully scaled. You know, 30 to 40% annual growth target. 2 years running now. So
It's phenomenal, man. I was writing this in the book the other day about, and I think I sent you a screenshot of it. It was maybe a few weeks ago whenever I was writing that part, but it was just about the turnover since we started, and it's just fucking crazy. I think I gave the number. It was like I wrote out the last kind of 6 years, and it's just mad. And you look at what we're going after this year, it's just fucking phenomenal. We've got a really good business on the go now. But I think, like, you never know if it's going to be a good business when you start it up. You fucking hope it's going to be. You think it's going to be. That's why you started it. But I do feel like we're at a different place now. We're a lot more focused, and we're a lot more, I think, aware of our time. Like, we're better with our time. We just focus our time on doing tasks that are a bit more like productive. Whereas in the past we've maybe been a bit spread too thin because there's been too much shit on the go.
I think, the other key takeaway for me for last year is just understanding, your business gets to a point where you've taken it as far as you can with capabilities that you have, and in order to go to the next level, you need to be really good at hiring and getting the right staff in place and training them and putting the systems in place and all that sort of stuff. And we've essentially lost a lot of ground in the last year. Now, okay, right, step back, we've grown our revenue 30%, we've grown profitability, we achieved a great result in the last financial year, but we expected it to be much better. And like, just understanding the chaos that reigns in the middle of trying to scale an organisation, get the right, I mean, how long did we spend implementing our CRM system? Only to realise, we're probably going to change it again because it's not quite right. That's so much lost time and effort, and we're not getting out of it what we need right now to help move the business forward. So there's so many little things like that nobody really seems to talk about, and the numbers kind of glaze over a bit of it because you see the growth. It's like tick box, guys are growing every year. There's so much inefficiency in here. There's so many times we've hired someone that's not worked out, they've left, we've had to start the process all over again, and what you expected in terms of the result you get from bringing in a position, a new staff member, in terms of growth and moving the business forward, doesn't materialise. You can waste 6 to 8 months. It just, it's one of the big unknowns, I think, in business that really is, a massive drain. So that's a big focus for us going forward this year, is how do we get better at that. And I remember recently Bartlett had said, if you start from the assumption that you're really bad at hiring, then you build the process around that, so you make sure that you've got the right people going through the right interview process. There's multiple checks and balances through the process, but at the end of the day, it's still not going to be clear how someone's going to perform until they're in.
Correct.
So all we can do is really try and build the culture around it. I think Hormozy says the 3 Ds: document, demonstrate and duplicate. So you have to have that kind of onboarding process, like what we've implemented with clients. Standard onboarding process. Making sure that there's almost a checklist of everything that has to be done in the key roles. And you can bring people in and get them up and running pretty quickly. And then that becomes your path to scaling. The better you get that, the better you can get.
See all that stuff, like, you mentioned Hormozy, Bartlett, like podcasts generally, and I hope everybody gets a lot of value out of this type of conversation, as well. And I just think this podcast thing is fucking phenomenal. For anyone, like, you never really hear about that many folk that are going out and starting a business. There's not a lot of them. Like, I really don't know. I don't think fucking.
Anyway, most of them have got their head down. They've got time to talk about it. Fair
comment, but I think the stuff that comes out from these guys that are just like so experienced, very successful entrepreneurs, and they spend the time like just talking to these other people. See the amount of fucking value I get out every time I put on a podcast. I've actually started listening more to podcasts than I have books, because I think the conversation that comes out of these podcasts, you just learn a shit ton of stuff from these top guys, and I just think it's fucking gold. Like, for people now thinking about starting a business, like, the amount that they can learn before they even make the move is phenomenal.
I think that's the biggest thing with a lot of the guys that are like business consultants or guys that can follow a model to scale a company. or any business regardless of industry, because no matter what size they're at, or where they are currently, or revenue numbers or staff bases or whatever, that they've all went through the same shit at some point. And so there is a process that you can follow at different stages as to how to get there. And I think that's where you kind of get it, because every solution creates a new problem. So we fix something and then we move into the next realm, and we've maybe moved forward, we've added another £1 million to our turnover, but we've hit a new block, a new problem, and we've not met anybody yet who's been there. And then these guys are way ahead. So they've been through all the stages, and they have hit the same problems, and it's not relevant to you. So I think that's why you maybe take things more from podcasts, because it's fluid. And I might listen to a book, I reread books or listen to them on audio multiple times. I've listened to the same book like 3 times, but when I listened to it 2 years ago, I've taken different things away from it than I have now. Because
you're at a different level, right?
You weren't problem aware. You didn't know what that was at the time and why it was relevant to you. Then it's like, right, okay, that kind of makes sense. And you already knew it 2 years ago, you just didn't know how to apply it at the relevant time. And I think that's where I get a lot of the value from.
And this is the reality of the problem, is quite often you're just not ready to hear it. I mean, you can listen to these guys and, the advice is there. Would we have taken it back in the day when we had our first big development opportunity, and it seemed, because you justify it to yourself, you self-justify it. So this is why the successful entrepreneurs that really make a massive difference are the ones that have rules and set rules and learn the lesson, set the rule, and become aggressive about that. It's like every time there's an opportunity that takes us off focus of the thing, we need to shut it down. And that's not easy.
What about that big deal we were talking about this morning?
Exactly. Shut down. Close. Let's move on.
I might find a way.
I think that's true. I sent you that clip of Callum White from White Cone. He went to Hormozy, took consultancy from Hormozy, and he was saying about the number of people, and he was like, for whatever reason, he said, I cannot get rid of these underperformers. It's like 40% of them are just shite, and I don't know how can I change it? And you're like, okay, do they all get trained the same way? Yes. Did they all get the same sport? Yes. And he was like, okay, we'll just get rid of them. Like, there's no other solution. And he's like, that can't be right. And he was like, well, who am I to sit here when these people have trained teams of 20 up to 20,000? They've earned way more money than me, they've got a hell load more experience than me, and they're just telling me that's the reality, deal with it. Why am I going to argue with that case? I'm just going to take what they've told me and apply it. And he says, that's the first time I've actually felt like it was valuable.
That takes me back to one of the earlier points of the biggest mistakes in the building company. It's the level of fucking arrogance you can have in your own ability. Like, I was convinced I could turn that around and fix it. And
I think we all were.
You hear it a lot of times, especially when it's been like, I wasn't emotionally attached to that company, I fucking hated it, but you get people who they bring it from start right up, and then they hit some trouble and they just refuse to pivot and let it go, and they keep going and they drive it into the ground, whereas we eventually had the realisation that this isn't going to suit our business, change the direction, and as soon as we did, it was just like everything immediately changed. It was so obvious.
Well, this is the point, and it can sometimes take that kind of extreme pain to change your perception. And full disclosure, for us, it was December 2023. We had our biggest month ever in Real Property Scotland, and I think, to put this in context, when we're talking about our kind of business, the trading side of our business, we're always talking about Real Property Scotland, which is our main focus. Buy-to-let stuff kind of kicks about in the background, so all this kind of business chat is around Real Property Scotland. We had our biggest month ever. I think we've done over 200 grand in revenue. Massive shift, huge amount of cash generated in the month, and it all went to stop the building company going over, going under that month.
I spoke about this a few weeks ago in a talk I was doing with an external group, and I was saying to them, I was like, they were all there to listen to our experience because of what we'd done in scale and property and everything we'd gone, and got a lot of positive feedback saying like we really figured that out, we've got shit done, and it's great. It's like, but I'm there to talk about that, and when I talk about our experience in the building company, it's like, who the fuck are we to listen to when you actually look back at what we've done? you know, we'll launch a building company because we're managing all our own refurbs and our developments because we want control and we need the volume. But you know, we'll make a bit of money on that. Start doing external refurbs, and then we're like, okay, there's not enough margin in it. Loads of fucking work and we'll make hundreds of money. And that was a fucking shit show. We've done that. So every time we've thought this is the move to turn it around, and the reality was like it just wasn't there.
It all makes sense on paper. It's all fucking beautiful.
It's like writing a fucking business plan.
You know, it was like going through the process of due diligence of buying that company. I fucking love that shit. You know, I love it. I love it getting into the guts of a company, pulling it apart and, right, okay, we've got the strategy. This is how we're going to merge it. We're going to save all this overhead. We're going to have these big high margins and it's all going to be wonderful. But you're starting from the most fundamentally wrong question is, do we have the skill set and interest and passion to actually do well at running this type of business? You know, that was question one from the building company inception, and it was fucked, you know. So
funniest thing about that is we actually paid a sourcer a fee to bring us that business opportunity. And it probably owes us about $250,000. We've never phoned the guy having a fucking go with it.
But you know, this is another interesting thing that we were keen to apply at the time was the business acquisition strategy. You know, there's still a load of cool stuff in that, and you know
that's the same. That goes back. There's nothing wrong with that model. That is a great model. Plenty of people do very, very well out it. It was just a bad deal. Okay, it was our one and only one we did at the time. So be it. We could go on and do 5 more, and they all end up working beautifully. The same principle applies no matter what industry it is. Whether it's property, you buy one dud and then the next ones are brilliant. Like you can't just be so short-sighted on that.
100%, and you know that's something I'd like us to get back to at some point, is reviewing that. Now, I think Real Property Scotland, it is more challenging. It's not an obvious one because, you know, I think what we've created with this business is very unique. You know, there aren't really any companies out there that are doing the same as what we do. There are people that do elements of what we do in different companies, but not bringing it all together as we do. So there's no obvious acquisition targets. Like a lot of our growth feels like it has to be organic, but there are potential bolt-ons that match our skill set, that tie in well with the congruence of the organisation. You know, like for instance, mortgage brokerage or finance brokerage, you know, those types of things are very congruent to what we do, and we have the skill set to manage that type of business. So it's definitely not off the cards. And you know, there was a load of cool takeaways when you did that course on business acquisition. You know, the way that you can structure the finance, it can be like a BMV deal. Vendor finance is a huge thing in property acquisition because you know, and the fact that you're dealing with a lot of kind of baby boomers just now that are hitting retirement age, that have profitable businesses there to be passed over, but not only profitable businesses that need to be brought into the modern age. Because if you've got someone in their mid-60s to early 70s that's been running a business profitably for years, the game's changing. You know, AI, you know, the online marketing, it's all rapidly changing, and chances are the business isn't as profitable as it could be implementing these new strategies. So like anybody that's in business has to be thinking about this sort of thing right now. It's
just another asset. It's the same as reviewing a single unit deal or whatever. You know, that's what we always talk about with portfolio acquisitions, is they tend to be businesses that are underperforming businesses that we're taking over, but we know it inside and out, so we know how to turn it around and get it back on track and to make it profitable again. But they either don't have the fight in them, you know, it's a bit far down the line, they don't have the skills and experience, or they're looking to retire and they've just let it run its course. You know, but that's the same with plenty of these businesses. So it's just, again, acquiring an asset and making it perform.
Yeah, absolutely. So I think before we kind of go on to talk about sort of plans for this year and what our big focuses are going to be, I think the last thing for me to kind of close off last year was, you know, whilst Laurie and I were busy turning 40, Conar was busy winning the 40 under 40 award.
So we usually were too old at that.
We were past that. But no, that was a massive achievement last year. So tell us about it.
Yeah, so it was good. I mean, that was the one. So, you know, it's a UK-wide award, and it was based on different achievements in business, but mine was in the real estate category. down to London for the awards night, and it was one of those ones that you don't actually know what's happening until you kind of get there, and it wasn't built on external votes either.
Yep.
So it was a judging panel, so you had different people from different industries who were reviewing achievements within the year. And one of the feedback I kept getting at the time is that, you know, it was 40 under 40, so it was the top 40 entrepreneurs in the UK under the age of 40, but I was actually the only one who was under the age of 30.
30, yeah.
Which was quite cool, but it was just an interesting room to be in. I mean, there was a guy, and you talk about levels, you know, I won my category and I was there and I was on stage with these guys, but there was still fucking levels like on the stage. There was a boy who'd done over 2 billion of turnover.
Wow.
And I'm like, a payments guy.
Payments. And
incredible.
you know, his profit margins were only like 3%, but it was still like 2 billion of turnover. And you know, to be fair, he was walking about with a Gucci suit and that, like he was fucking... He
3 wives.
he had, whether they were rented or not, I don't know. But, you know, the table, like, it was just, he had an aura about him, and it was, you could tell, and it was just him and his mate, and he spoke back about the backstory. He worked for an employer who fucked him off. You mentioned these 3 Ps, like they were doing something, it was a payment provider thing, they fucked them off, both of them decided to jump ship and set up on their own. They were literally working from like the back room of their house, and they were just created this payment platform international where they could exchange currency from like Africa, I think was the primary focus, and you know, change of currency to then be distributed, and there was no fees. I can't remember the business model, but anyway, within the first 6 months they got a lawsuit against them from their previous employer trying to shut them down. You know, so it's like they've just went into this new business venture and it was nearly fucked before they could even get it going. Fast forward 5 years and they're doing like 2 billion in turnover. And it was just incredible. You know, so that experience alone was quite cool, just to meet people like that. So a couple other big kind of well-known personalities in the property space, other educators that were there. You know, they previously won these awards as well. And as much as they've got their business acumen, they are absolute fucking bellends. But their businesses are doing the talking, and that's all I can say about that. But you know, it was you know, Ryan, my wife Caitlin Ryan came in as partner Fiona. And it was just very clear that there was a lot of influence because we were the only ones from Scotland, or we thought actually. There ended up being another girl from Dunfermline. She never won, but she was nominated for one. And you know, this industry, regardless of business, when you've got a profile, it's clear that the circles just click, and they're always going to know who they are. And it felt on the night, you know, that it definitely wasn't going to go my way because of the influence from these other people who were literally shouting out people in my category when they were up on stage. And it just was like, right, okay, you know, maybe a wasted trip, but I'll take the fact I was nominated as a win and we'll go back up the road. But it came down to one of the main sponsors, a guy called Rhys Meny, and he's doing a big, it's really interesting, his branding's very similar to ours, and I thought it was one of these proud of the universe moments, but his highlight reel came up and it was like the black trucks with the gold and stuff. It was like that was very similar, and he had a very similar concept to what we thought our developments business was all about, where he's buying up old vacant commercial premises and converting them into resi. Now, we thought that was a golden ticket, and again, it is a strategy that works because Rhys's business is very successful. They're doing hundreds of millions of development at the moment, and they're also in Dubai now. And we just, you know, that wasn't our bag, but it was for somebody else. So they were doing that kind of thing, but he was on the judging panel, and I think it was his vote that made it swing for me to win. And he just said it was purely based on what we'd actually achieved, and we could prove it. And that was the main thing. So the 60B project, Bell's Dyke, you know, the 60B one, he's
Temperance House,
you know, those types of projects which we look back and say, apart from 60B, but you know, like Temperance is like, that's a fucking bollock, but it still gets recognition from those people who know and have been there and done it themselves about how fucking difficult that actually is. So that, you know, I had a good chat with him afterwards as well.
I mean, Temperance House is always one that, you know, irrespective of the financial performance of it, which wasn't terrible in the end. It cost a lot more than we thought it would to develop is the long and short of that story. But, you know, it's a historic building.
It's a fucking beautiful building.
Stunning.
It's absolutely.
Even when you get to the end though, like we had people wanting to buy them, but then there was just other complications. Surveyors, mortgage lenders saying because it was above commercial and hot food, and it's literally a tiny corner of it's above a Greg's.
Nuts.
I mean, it's a high street property. You know, it's just like, come on, man. And then valuations are there's no parking. It's like, well, again, it's town centre.
Stuff.
You don't need to have parking. And it's just like, you think you've got through the hard bit, and then you get hit with some more shite. So, and we weren't in a position where we had to sacrifice our hard work, so we obviously decided to keep them.
Yeah.
But we got them all let for like record rents within a week or two.
Okay.
But the story of that building, it was one of the first places that John Logie Baird demonstrated to television. I mean, it doesn't get more historically significant than that.
Yeah.
You know, you're not talking about a little invention that we use in Scotland, you're talking about something that is fucking worldwide fundamental.
Now it has a better history, because it was also the first office of Wood Group.
It was, yeah.
And I've got the pictures to prove that as well. Yeah.
So I'm happy to hold that, and you know.
Yeah, I mean, it's an iconic project. You know, it obviously got publicity and stuff like that as well, and we still hold those assets, so it will come through it. But yeah, I think those types of projects played a big part in me winning that award, along with everything we've done with Real Property Scotland, because it's one thing, you know, to achieve the level of success in the investment game that we have, but to have multiple, and I mean multiple clients doing it. It shows like we figured this out. This shit works, and we go through it. You know, and sometimes again, like we were talking about, you're not willing to listen. I find that sometimes with clients at the time, because they don't quite believe, and when we say things, they're almost second guessing. Even despite they've paid us for the advice and things like that, they still second guess what we say until it comes the moment they go, oh fuck, they were right. You know, and that's when they're like, okay, cool, when they go on to make some big moves. So.
That's the human condition, unfortunately.
But overall, the award, you know, was a big achievement for me anyway.
Incredible,
and a good experience for the night out in London as well.
Yeah.
No, really awesome, and you know, like you say, it's just going up against the people that you were up against to go down there and win it, even although, you know, we're just some firm that nobody really knows that much about from Scotland. You know, it was really cool. And you know, a big focus for us has to be on building our profile, and that is a massive step towards doing that. So let's transition on a bit then from last year and the challenges and opportunity that we had to what our focuses are for this year. What's top of your agenda?
Fucking well, do you know, it's funny because there's a few things that are like top of the agenda, and one thing I was thinking about just over the course of this week actually was the fucking size of the deals that are coming across our desk these days. Like, it's not just, you know, when we got started it was a single unit here, single unit there, and you know, whilst that is going on in abundance in the background, there's now like all these big fucking like £1 million plus deals like that we've got on the go, and like it's just fascinating to see the types of opportunities that come across our desks now.
I'm always challenged by that phrase of these things that are coming across our desk, because nothing's just coming across the desk or landing on the desk. We're out there fucking.
I know, but the types, because of our credibility, because of all the moves we've made in the past. People are coming to us because they know us, they know we can get the job done.
Because of things we've done, you don't just rock up and do a 100-unit deal out of nowhere. The reason it came to us was because of everything we had done in the years prior.
100%. But it's nice, man. It's cool. It's like next level, you know. And okay, that we've no like quite got anything on, you know, signed and whatever yet. But the amount of big opportunities that are coming across our desk for all the right reasons are fucking exciting. Whether we choose to do something on them or not or whatever, like it's just an example of kind of where we are these days in the market. I mean, obviously, you know, we're continuing to grow the client base, we're continuing to grow the deal side. You know, we're in East Midlands now. That was another thing we started last year, to be fair, but we're looking at making bigger moves there. We've got the likes, we've got our next HMO project, which now might be a fucking hotel. You know, talk about just getting started, fucking rolling with the punches and seeing what comes out. You need to pivot, right? So that's ongoing. But
you know, again, just to highlight, that's another deal that nobody would have looked at. You know, on the market for what, 150k.
I put a post about this. It was about another deal that that I'd done actually for clothing for Emma's company, and it was a fucking open market deal, and it was valued at 100 grand, and I bought it for 61 grand, and it was on the open market. It was a fucking 3-bed townhouse, like, and I made the point in the fucking post, anybody could have bought that fucking deal, right? That's another one that just got up valued 105, fucking, you know, incredible. On the open fucking market. You mentioned the point about 7 and 9 Laporte. That was on the open market.
Yeah.
Fucking, as soon as I walked past it, I thought, fuck me, didn't even know it was on the open market. I'm going to go and check it out.
I still think on that one though, because we got it for what, 65 grand?
65, yeah.
So it was on for 150k with the shop unit and the space up above. So we're converting the space up above 11 rooms. Yeah.
No, I mean, it's probably going to end up with a hotel 13.
13 rooms.
That's
what
what
it
I'm
was
going
13 originally. So 13 rooms up top and then the shop downstairs, which is just put a barber in there at
12 grand a year.
12 grand a year, and we bought the whole thing for 65. But I still think if it was anybody else that went and offered that they would have said no.
Maybe, aye.
And that's not like an ego thing, it's just based on who we were and what we'd done, the relationship, they did know of us. There was a brewery thing in the title that probably put most people off, and we were sound, we just said, we know, factor in the risks.
Do you know the funny thing about all that and all that fucking saga and the whole, can I put Resi in there? Doesn't fucking matter now if it's a hotel.
Serve the same purpose, but the point is we know that from experience and working with the right guys that we'll pivot and we'll make a difference, we'll find a solution. But you know, there's a lot of people that wouldn't look, then even if they did look, probably wouldn't think they could get it for half its value, and then even if they had tempted with a low ball offer, they probably would have just been laughed at the door. So there's a lot of I think that's where a lot of the compounding of year on year, when we're doing these recaps, that year on year we continue to make moves that it makes some things a little bit easier going into the next year. A lot of things still become harder because we choose scale and they're going a more aggressive, especially like the recruitment front and all that stuff. But based on what we've achieved the year previous, a few more doors open a wee bit easier.
Every fucking thing, every year, man, very valid.
I think the thing that got me on that was you were talking at PIN not that long ago, and most of the people in the room hadn't heard of us. But you know, big Scottish event.
There's 100+ people in the room, and when I actually asked the question, there's fucking 5 folk put their hand up. Who actually knows us? 5 folk.
So like building our profile has to be a big focus for this year.
Definitely.
You know, we're doing a lot of really cool stuff with a lot of really cool clients. More people need to know about what it is that we're doing.
That was that event you did, and we actually got a client. Is it Michael?
Michael,
came from there, and he'd worked with other people in Scotland, tried to do a sourcing business for like a year or two. Money down the drain, not done a single deal, not done anything, but he had cash to buy deals. Came on, I think you met him the Thursday, he was a client by the following week and done his first deal the following day.
Phenomenal.
And then he's back out, he's got the refurb underway, concluded on it in 4 weeks. So from like 6 weeks of meeting us, he had keys to his first place. And he bought it for like 35% below market value up in near Aberdeen. A house.
Just agreed the second deal.
I was going to say
yesterday, I think.
I did. Good man. Good.
It's like two deals in less than like 8 weeks of even knowing we exist. And 2 years having paid thousands to somebody else to go and create a business that he'd never done anything with.
This is so important though. You know, the learning with anything is in the implementation, and that's what we can do. You know, because you know, anytime anybody goes on a course or they go to learn about stuff, they come out the other end and say, okay, I've got all this knowledge, but how do I apply it? And if you can't get past that first hurdle of finding yourself a deal, where the fuck do you go, you know? And
that's what a lot of people, I mean, depending on the route they take, a bit like us when it comes to focus, if you're sitting there with a bit of capital and you're thinking property's the game to go down, you don't maybe know how you're going to do it, so that's where the training comes in from other sources, and you learn all about the different strategies. But the thing that kind of gets me is they sell the sourcing as the route to build up your cash so you can then buy more. But if you've already got capital, there's much easier ways to get finance and get cash to buy deals than there is to create a business to generate revenue and then profit to then invest it. Because that is a long-winded process to get to where you want to be. And it's not as fucking easy as people make it out to be. And that is, you know, you take consultancy just on a sourcing business alone to scale it at the level that we have.
It's actually pretty fucking scary how, because I nearly fucked myself with that as well, you know. But at the end of the day, the reason for me even sitting on the table with the news, because I chose to go and fucking make these moves, but it was like 100 grand odds I'd sunk into the fucking sourcing business at the time, you know. And,
but that could have been 100 grand you could have just used to buy deals.
That's my fucking point. But I was expecting just to make loads of fucking coin. But the thing was, any time I did get a deal, well, I didn't want to sell it anyway. I just wanted to fucking put it in the portfolio.
So for me, this comes back to training for the least efficiency. So it's a concept of, you know, if you're going to hire a CFO, like they might not have certain interpersonal skills, but they know how to be a CFO. You can't fucking teach them how to be a CFO. You want experience. You want you want that level of understanding and experience. But you can teach them and improve on their interpersonal skills and how they act with other people, etc. So training for the least efficiency, you're saying like training to become a sourcer is incredibly hard. You know, it's taken you over 10 years to get to where you are, and managing complex and difficult situations with you know, vendors that are in a really tough spot, to be able to then merge that into a deal and then sell it on to someone who also makes sense for them to buy and achieving their financial goals. That's incredibly complicated and requires a multitude of skills, whereas we can teach clients, right, here's where to go to sort out your finance. Here's exactly what to do to sort out your tax. You don't need to understand all the tax stuff. This is what to do. These are things that we can teach. But, you know, realistically, teaching someone to do all that fucking complex stuff on the front end that it's taken us years to get guys up to speed on to get good at.
That's the thing. It's one thing then learning it yourself, but then to actually go and scale it where you can do volume, you need to then teach other people. So you need to show them how to do everything that you've just spent all the time learning, and then you need to be able to do that on a massive scale, and also not have like one hitter quitters all the time where you just sell a shitty deal to one person and you know it's a dud and you'll never see them again, but also have a retained client base who are coming back to you, and the only way they're coming back to you is if you've got quality. So you can't be selling shite out the door, and you know, not every deal works out and they're challenging and all that, but the outcomes of majority are well worth the...
Too many fucking clients now with too many awesome results for there to be any fucking doubt about our model. Like, too many.
And it's not 100%, you know, and that's one of the things that you get quite, you know, caught up about sometimes. You know, it's like you're always emotionally attached to the outcome of every deal, as if you feel personally involved. But it's the same with any business, that you can't have perfection. You know, we all strive for this perfection, but it doesn't exist. And then you listen to these higher level guys who even run like coaching businesses, and they said if you've got like a churn rate of like, you know, you retain like 80% of your clients and you have 80% of success, you are in like the top fucking like coaching businesses. And that to me is like fucking madness. So it's like 20% of your work is going to be shite, or it's not going to be quite as what you want it to be. It's not required and it shouldn't be expected, but you know, it's a difficult one to think that there's such a high kind of margin.
But it's also dependent on what you put in, because you know, it's like if there's no barrier to entry, then your retention level is going to be lower, because it's natural, like hiring a staff member. You know, a lot of people aren't going to be cut out for this. You know, at the end of the day, whilst we talk about, you know, providing the steps necessary to accelerate a property business in a profitable way and a long-term growth of wealth, like if someone's not willing to listen to us, if they are bound by these limiting beliefs that they have in their head and they're not willing to take the steps they need to take, there's nothing we can do. And at some point you just need to say, okay, well, you know, I've given it a shot, it's not going to work.
And it's just been very clear about what it is that we do as the benefit, because we're not a bespoke, tailored like sourcing service. I don't have the time and ability to apply that to like one individual. We're a house buying company that produces abundance of opportunity, and then we qualify and help our guys to understand what those opportunities look like and capitalise on them. Like it's quite simple in that, but I don't know what location it's going to be in, what it's going to look like, what it's going to require. I don't know that. It's based on opportunity coming and being equipped with skills to assess it and make the best of it.
And without doubt, the clients of ours that do the best are the ones that are here to make money.
Correct.
The ones that are here to make money and buy in this specific area and only buy this type of thing and feed another business, like a joinery business off that business. It doesn't work. There's too many objectives there. We're here to make you money in property. That's it.
That setup just goes back to the building company thing for us. We thought we would just sew up every little bit to make it all work and it'll all be beautiful, and it fucking doesn't. You're not going to get that business there is not going to grow, but it's going to kill this one, and that one has the potential to grow. So it's like, focus on this, because that's when all the good parts that you're trying to find exist here. So just double down on that and you'll get the result. But some people struggle to see it like that.
I think hoovering's getting done upstairs. Jim, that's a way to ask the cleaner that stuff.
So I think the last question I want to ask each of you to answer separately is...
Conar can go first then, so I've got time to think.
What are we going to do in the next 12 months to take a business from over 2 mil to 4 mil?
That's an easy one for me, because I spend a lot of time reflecting, like we were talking about, in terms of everything we've achieved and that award for myself and how we kind of got there. And I got there by just being very good at what I do in terms of the role. You know, as being like a property sourcer or deal structuring or selling, you know, like being able to take something and create a value from it. And what was very difficult from that is to then go and I've not actually been a business owner. And I started to then think more like, I need to be a business owner now. I can't just be the best performer. And my mindset has changed to that. So the first decision that we spoke about was, we want to bring in a strategic management level to the business, because by bringing in these guys that can do things that we can't, will allow us to go to the next stages. And that started fundamentally with marketing, and we brought Lee on board as our kind of head of growth. And it was just this reality that you need to start thinking about, what can I do for the team rather than what can I come in to do to get on the tools and generate some revenue. And that's about the startup hustle thing that we have to do.
You don't get out of the ground if you don't do that.
No, like, it's essential, and it always will be. There are days when I need to jump right back in and sort shit out, but you know, again, from listening to people at like much higher levels, that's all like a CEO is. A CEO just hears about the biggest fucking problems, and they cannot complain about solving, like, dealing with problems every day when that's your gig, mate. You know, and that's what I've become accustomed to, and then I fucking love it. Like, a few years ago we had a guy, I don't know if you remember, LD, we spoke to him, and his LinkedIn handle was like, he was a professional problem solver, and we all laughed and was like, that's what I should call myself, because that's all I fucking do every day. And now it's like, that is what I am. You know, I only hear when they're shite. So it's like, my day doesn't maybe look all sunshine and rainbows all the time, because I'm just dealing with shite. But that's where you get success. You know, the biggest pain point you can solve is where you make the most value or the most money out of it.
And actually, the biggest opportunity for failure as an entrepreneur is not dealing with the big problems head on. You know, because it's so easy to delay decisions.
That's why I have this like.
You're probably the most aggressive.
I am, because I just can't be fucked with any more. It's like, we just need to deal with it and move on. And that's my view. And it's not the right view, but it's
no.
How I feel.
You know, the fact is, you're exactly the opposite of what is a killer for businesses, which is, you know, unwillingness to make big decisions that are likely to kill your business. There is maybe a balance in between where you say, look, this problem might go away tomorrow, so let's just no deal with this one today, and then
that's where you as the mediator come in and say, I'm fucked down, LD. Just
picking your battles is for sure like a big thing, because you know, you can react immediately or you can sit on it, but there are ones where you have, you know, it's, you let the biggest one stew, or the eat the frog thing. It's like, you deal with your biggest problem first.
But I like that about us, because I like the fact that okay, I'm the most aggressive guy and I have the most aggressive views. I like the fact that I can just fucking say it, and it's not to say that that's what we decide collectively to do, but I think it's important to debate the thoughts. You know, what's the right thing to do, because it's not necessarily the aggressive thing or the mediated thing or some other idea that comes into play, but it's a nice balance to just
what I have to admit though, like, we're talking about what we plan on doing this year, is one thing that I refuse to do now, that I've done, and I even knew at the time was the wrong, is that this whole like trust in your gut thing. And if you just get the feeling, and even though you fill yourself and talk it through and you give yourself these justifications, it always comes back to be that your feeling was fucking right. And I don't know what it is, but that is a human instinct that fucking exists, and I refuse to ignore it.
Understand yourself, understand your business, understand your core skills, set principles and values that you stick to aggressively, and from that point, trust your decision. You know, because if you haven't done those first steps, the gut feel thing might get you so far, but like if you have stacked all these things, the true understanding of yourself, the values and principles that your businesses are founded on, and then you get to a point where there's a decision to be made, and your gut working from those steps points to something.
There is just and obviously I'm a practicing Catholic and that, and I've got my faith and whatever, but I dropped you off at your house a few weeks back, and I just got the new car, and I honestly, I don't know what it is, but it's what fucking confirms to me that something else does exist, right? I left yours coming out where the wee roundabout is, and I was driving the new Merc, and as a kid came across on a scooter, right, and I thought to myself, I can see him, I'm going to slow down, because I don't imagine he's out playing by himself, and within the next second another kid comes flying right across my fucking car.
Jesus.
And it just hit me to think, take a second here, slow down for some reason, and I honestly I'd have run that kid over had that not happened.
But that's experience though, right? I mean, you know, like you've experienced the fact that kids are generally not kicking about themselves and they're wild, so let's but it was mad. I just remember thinking, like, what just told me to fucking do that there? But it was crazy, and I genuinely would have hit a child. Jesus. Wow.
Well, my thing about like getting up to it still fucks me off / frustrates me, to be a bit more benevolent about it, but that people don't fucking know us. The offering we have is fucking solid. See, if we just had more exposure, we would have more clients, we could expand the market, and we could be doing more deals, we could hit our 4 million, no fucking problem in my view. So that is a big fucking focus for me this year, is like getting the brand, as individual brands as well as the corporate brands, getting them out there, because we just do not have enough exposure right now. So that for me is the number one thing this year we need to nail, because I think if we do, I think we might be quite surprised at how big we can grow this fucking business. I mean, without a doubt, we discussed it yesterday, that has to be the focus. We need to get out there more. We need to be talking.
I think anybody we've spoken to always comments on the fact that so many people, when they start a new venture or they go into business, they do that front end bit, and they shout a lot about what they're doing, and they're out everywhere, but they're actually doing fuck all. You know, but they're talking like they are. Everybody we've spoken to is like, fuck, you're doing a lot of the back end stuff, and not many people know about you. So actually this will be a piece of piss to scale. I'm like, well, step right in and show us, because that's side of things we don't know, but we know what we're good at. So it's exciting, but I agree that putting us at the forefront and letting more people know about who we are and what we do is how we'll get there. Definitely. Yeah, I mean, I don't think we're at a point this year where we really need to think too aggressively about expanding the market. You know, obviously we are down in the East Midlands, but just with the auction just now, it's kind of dipping our toe into it. Very different market. The buy-to-let model doesn't really work down there because property prices are higher. People are doing very different strategies. But the principles of getting below market value deals and trading them on the clients, that works. If anything though, immediately to give our clients a perspective, is it actually creates the Scottish assets to be more valuable. Because when you compare them, like, it just doesn't stack. You're getting the same rent on like a 4-bed house as what you'll get in a 3-bed flat up here, and they're like a third of the value in Scotland compared to these things. Lots to think about. Lots of cool stuff. Lots to talk about, and we could go on for ages, but we'll need to draw it to a conclusion. So gentlemen, thanks for joining me. Thanks for having us, man. Have us back sometime before fucking April 2026. Well, we'll do it January 2026. That's all from us. This has been the Real Wealth Podcast. I'm Alex Robertson. Thanks for joining us on this wealth journey.